Idea here is that at least in the short term, what this tells me, this negative divergence, right? Higher highs on price, but lower highs on the RSI. It usually tells us that price is about to pull back. And again, 80-ish would be generally that target price. Maybe lower, but we can't assume that.
If silver was to rally up to 106, right up to this level, 106 up here, you know, a pullback, which is what happened in 2008 and those previous spikes that you said, they were big. They were 50, 60, 70% pullbacks. And believe it or not, you get that 50, 60% pullback, it brings us down to this $45 per ounce silver, which is a very big breakout point where price just exploded after. And I believe, you know, that's potential downside in silver. I think gold could pull back 25 to 35% if we do have a big correction. Now,
silver is currently witnessing a historic breakout, with prices surging a massive 33% in just the first 2 weeks of 2026. As silver approaches the psychological $100 mark and gold climbs toward $5,000, the market is experiencing extreme volatility, including a sudden 8% flush designed to wipe out over-leveraged positions. With institutional money starting to sell into the retail frenzy, the urgency to understand these charts has never been higher. Join master trader Gareth Soloway as he strips away the hype to provide a technical deep dive into these record-breaking moves. Gareth breaks down the change in character appearing on the RSI, warning of negative divergences that often signal a looming pullback. He analyzes critical pivot levels for both metals and explores whether this is a temporary liquidity dump or the start of a major correction. Is silver about to blow through $100? Or are the smart money players already making their exit? Watch to find out. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
What's going on with silver? Silver, a massive surge yesterday. Overnight, a flush of 8%. It's recovering. But again, is this telling us something is at work? Was that a liquidity kind of dump out to kind of wipe out the leverage in the system? Something we see very often in crypto with the amount of leverage that you get there. We're going to look at gold. What's gold telling us on a technical analysis basis? As always, all charts and no BS here. All right, let's take a look, folks. Here's your silver daily chart. Now, again, this really doesn't show the dramatic overnight action that we saw. Again, here's your daily chart. We've been climbing at record levels. And just to put this in perspective, folks, take a look at where we were on the ending price of 2025. Right here, we are up low to high 33%. That's how much we've rallied in silver just in the first 2 weeks of 2026. Incredible. Now, silver is near $100, the even number that most people have been calling for. I've been a little bit of a skeptic here, not because I don't think silver's going higher. In fact, I think it's going well over 100, but I'm very normalized to a market that is not as driven by emotion, which has corrective moves. Now, we haven't seen those corrective moves, but again, there's starting to be negative divergences on the chart. But as of now, the chart is what we abide by. We know that this was a major high pivot. We know that all of these lows along here were major low pivots that pushed price up. So this line is valid. Therefore, we must assume the parallel is valid, and this could be resistance. So let's watch closely today. Do we blow right through this and head towards $100 an ounce, or do we correct? Now, there is one thing that has me a little concerned. It's the first time in a while, in fact, in this run, that we're starting to see RSI negative divergences. Now, RSI negative divergences tell us that there's institutional money selling going on in an asset. What you can see here is if we look at the RSI from this point, and again, this would be a quick crash course in RSI, is that you have a low here, right? And then a higher low here, and then a higher, a low, a higher high, and a higher high, right? So again, you have higher highs. You can draw a trend line, see that trend line is going up. And what we see here is price was doing that as well, right? Price was going up. Now, the change that we've seen on this latest move here in the RSI is that we've now started to make a significantly lower high on the RSI, even though price is making a higher high. Do you guys see what's going on? So here's price high, higher high, high, lower high. You guys see that? That is a change in character. Now, again, in technical analysis, it tells us that there is someone or some players that are now starting to dump into the retail frenzy. And essentially what it tells us is it's the beginning of a potential warning sign that we could be nearing a top in silver. And the idea here is that at least in the short term, what this tells me, this negative divergence, right? Higher highs on price, but lower highs on the RSI, it usually tells us that price is about to pull back. And again, 80-ish would be generally that target price. Maybe lower, but we can't assume that. We must go with what the chart is telling us. Now, let's flip over to gold, right? So we're going to take a look at gold now and see what is going on gold. Do we see the same sort of divergences? Let's go into the charts. All right, so number one, first things first. Gold, we have this high here, and this is still holding on the futures chart. You guys see that? So what we have here is this high pivot to this high pivot before this flush out and then recovery. That is still holding resistance. Is that if we break above this and confirm, we're probably going to 5,000, right? I mean, we're at 4,600 already. That's only another $400 to the even number. I think we're getting there either way. Even if we pull back or even if we correct, I still think we're going to touch that 5,000 at some point this year, maybe even in the first half of this year.
Technical analyst ChrisVermeulen joins the discussion to provide a roadmap using his favorite tool, Fibonacci extensions. He identifies a key hiccup at the golden ratio level as a bullish indicator for a massive upcoming percentage gain in just a few trading sessions. Chris warns of potential 50 to 70% pullbacks seen in previous cycles, but emphasizes staying invested with the trend while strategically locking in profits. Will silver resolve this pattern with another massive explosion, or is a multi-month recalibration phase just around the corner? Now, let's hear directly from ChrisVermeulen.
There's no doubt it is exciting. I mean, we've been waiting for silver to have this type of move for decades. It feels like it has been decades, and now we're starting to get it. I mean, when we look at the charts, I'll share my charts and give you kind of a projection of what the charts are pointing to. When we look at the daily chart of silver, obviously we've seen it just really explode in 2025 and so far in 2026. I mean, record amounts of silver is being picked up. So it is a hot commodity. It's becoming mainstream, the play to be in. And just looking at this chart, just using technical analysis, which you and I, Elijah, have shared quite often, is the Fibonacci extensions, which are one of my favorite tools. I find it is the most powerful and the most accurate tool to identify where the next level for price action is to move for any given asset class. So based on this run up that we saw coming out of October to this high capitulation peak that we saw back in December, and then we come back down to this low, this gives us an idea of two levels where silver should run into some resistance. The first one is this 618 extension. This is called the 61% move. This is called the golden ratio. This is typically where if the golden ratio level is reached and we see some volatility, which we have seen, we had a very sharp pop into this level. And then as you and I are speaking on this particular day, which is January the 15th, a Thursday, we saw a very sharp pullback, gap down, and then it's rallied back up. So this is a very good sign for silver. If we have a hiccup, a pause or pullback at the 618, we usually almost always go up and hit that 100% measured move, which is 106.25. So there's a pretty nice potential move here for silver based on the current price. That's about a 16% gain. And that could actually happen with only a couple trading sessions, the way silver is moving. So very bullish short term for silver. The longer term picture of silver, it definitely has some signs of warning when we zoom out on the charts. And I'll just kind of clear some of the drawings. We have this big capitulation, this big peak. I'm always afraid of things that go straight up because it usually means it's a crowded play. Everyone's buying at the same time. Nobody wants to sell because they like it. So it just means you got to pay a higher price in order to get some. And so we get these giant parabolic moves. That being said, I do feel like we finally have cleared that $50 mark. When we go back, we look at silver back in the 80s and the peak that we saw back in 2011, and we kind of just carry kind of that price action through here. I feel like, we've broken through that $45, $50 per ounce level. And I think we're going to probably see silver stay above this and dramatically above this as it keeps working its way through. So silver's on its way to continue to move higher. The big question is, when do we start to see a bit of a pullback or pause in this space? At this point, we're still looking for 106 on silver as the next target. And then after that, it's probably going to do what we have seen many times before, which if we zoom out on the silver chart, it tends to rally and then take a breather, right? It'll move up and then it'll take a breather for a long time. Then it'll have a move up, pause, move up, pause. So I believe when we get up to 106, it'll have another big pause. And the big question is how does the price action move? Is it a pause before it goes a whole lot higher up to like 120, 125? Or is it a potential topping sign? We don't know. The nice thing about charts and using Fibonacci extension is it just shows us where the next target is, and we just have to manage our expectations and our positions based around that. So I'm very bullish on silver. It's exciting to see where it is, but got to be aware. I think, we got about 15% more upside, and then I think we could go into a multi-month pause, and then we just need to see if it's going to have a bigger correction from that point or if it is just a pause. So the last time we had a big sharp pullback after these parabolic spikes, we saw silver fall 50, 60, 70%. And believe it or not, I'll share my chart here real quick so you can get a visual. So if silver was to rally up to 106, right up to this level, 106 up here, a pullback, which is what happened in 2008 and those previous spikes that you said, they were big. They were 50, 60, 70% pullbacks. And believe it or not, you get that 50, 60% pullback, it brings us down to this $45 per ounce silver, which is a very big breakout point where price just exploded after. And I believe, that's potential downside in silver. I think gold could pull back 25 to 35% if we do have a big correction. Now, the big thing is you don't want to bet on what you think is going to happen, right? And that's what gets people offside and gets them in the wrong positions or holding on to positions that are going against them. The key is you got to stay invested with the trend. You can slowly sell and lock in profits, trim off some of your positions, and that's what a lot of people are doing. And then the big question comes, Elijah, is like when we start to see the price pull back and chop around on the chart, say it gets up to 106, it's going to form some type of pattern, something. And the big question is it going to resolve and break to the upside and have a huge move and explode even higher? Or does it actually create a topping pattern and then start to break down? And if it starts to break down, that's where I step in and be like, okay, this move is over. I want out, and I will let it recalibrate, figure out how far it's going to pull back. And then when it turns around and builds a new base and starts to move higher, then I would get back in just because I'm more of an active investor in terms of I only want to hold an asset going up. If it shows signs that it's going down, get me out. I'll just buy it back later when it's proven itself. So
whether you follow Gareth's warning on RSI divergences or Chris's Fibonacci roadmap, the consensus is clear. Silver has entered a change in character phase. This isn't just a typical rally, it's a high-stakes liquidity event where smart money is testing the resolve of retail investors. Success in this 2026 metal supercycle requires more than just holding. It demands active management of your expectations as we hit these major high pivots. Are you prepared for the next multi-month pause, or will you be caught in the next 70% recalibration? If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.